The Asian dragons are rising anew. Looking around Asia Pacific, Chinese growth has beaten forecasts recently and a financial crisis looks unlikely, while growth in Hong Kong is improving. Brighter economic prospects in these markets should boost office property, as firm investment demand suggests. In Singapore, growth has been slowing and rising supply has weighed on property markets. However, Singapore is a world-class metropolis with a sophisticated economy and high transparency, and it should continue to attract investors looking for stable long-term returns. Australia's economy remains buoyant, driving strong rent growth in Sydney and Melbourne, although there is a growing shortage of property stock. Donald Trump's US election victory raises challenges for Asia, including a possible hit to confidence and growth and tariffs on imports. Uncertainty has risen for China in particular, and this must temper our optimism about improving near-term prospects. Mr. Trump's policies may prove either expansionary or contractionary for the US economy. There are arguments both ways. However, if US growth suffers under Mr. Trump, US interest rates may only rise gradually and the dollar may eventually fall. This outcome would support Hong Kong property assets, since it would mean that negative real interest rates persist. However, dollar weakness would hurt Asian exporting nations, notably Japan, where the dull economy and the strong yen have already depressed property investment. Real though the risks are, the US election outcome should not blind property investors and occupiers to the fact that current economic developments in much of Asia Pacific are positive. In any case, we expect the combination of Mr. Trump's victory and Brexit in the UK to serve as a reminder of the potential for shocks in developed as well as emerging markets, and so mitigate political and economic concerns about Asia over time. From an investment perspective, as important centers in Asia's largest economy, Shanghai and Beijing are attractive if one looks past low near-term rent growth due to increasing supply. With rising overall rents, Hong Kong still looks appealing in the near term. Singapore's 3.5% net yield and long-run strengths outweigh falling near-term rents, while India has high long-run growth potential and deserves closer attention.